Fears of new global financial crisis, Turkey's free fall triggers huge losses. Turkey's plight deepened on Monday as the lira fell to new lows and President Recep Tayyip Erdogan's refusal to abandon his unorthodox economic policies left investors fearing a new global financial crisis. Turkey and other countries that borrowed freely when dollars were plentiful and cheap now face soaring debt payments they may no longer be able to make. Such worries mounted as the plunging lira dragged down currencies in developing countries such as South Africa, Argentina, Mexico, and Indonesia. On Wall Street, trading screens glowed red as stock market losses that started in Asia spread across North America and Europe. Turkey's ills have been inflamed by President Donald Trump's abrupt move on Friday to double tariffs on imported Turkish metals in a bid to punish Erdogan for refusing to free an American pastor facing terrorism-related charges. As the two NATO allies squared off, National Security Advisor John Bolton met at the White House on Monday with Turkish Ambassador Serdar Kilik at the latter's request. They discussed Turkey's continued detention of Pastor Andrew Brunson and the state of the US-Turkey relationship. Sarah Huckabee Sanders, the White House press secretary, said in a statement. Turkey is in financial trouble because its banks splurged on dollar borrowing in recent years while the Federal Reserve kept interest rates near zero. The government in Ankara also busted its budget to spur economic growth, especially in the wake of an abortive 2016 coup. With each lira now buying fewer dollars, Turkish borrowers' debt payments are quickly becoming unmanageable. So far, Erdogan is resisting investor calls to raise interest rates to support the currency, or to seek a bailout from the International Monetary Fund. If Turkish borrowers default on their debts, foreign banks, especially in Europe, would suffer big losses. Large Spanish banks are owed more than $82 billion, $124.2 billion, while French banks have $38 billion in loans outstanding, according to the Bank for International Settlements in Geneva. Turkey's predicament is largely the result of its own errors. But the nation of 80 million is unlikely to be the only casualty of the shifting financial climate, which stems from changes in policy at the Federal Reserve and other central banks. The US dollar, now at its highest level in 13 months, is being driven higher by the Fed's interest rate increases and its sell-off of government securities. Markets are waking up to the reality that there will be consequences to the rise in interest rates, said economist Jacob Funk-Kierkegaard of the Peterson Institute for International Economics. It's part of the transition away from the zero-rate environment we've had where money has been really, really cheap. Global debt loads have exploded since the Great Recession. From $97 trillion in 2007, total household, corporate and government debt grew to $169 trillion last year, according to the McKinsey Global Institute. Much of the most aggressive borrowing has been done by corporations, notably in developing markets such as China, McKinsey said in a report released in June that warned of potential vulnerabilities. Global corporate default rates are already above their long-term average, and the prospect of rising interest rates may put more corporate bond borrowers at higher risk, McKinsey said. For now, the worries are confined to emerging markets that suffer from the same debt problems as Turkey and their European bankers. The Turkish crisis is not a serious threat to the US economy, or the banking system, or the Fed's plans to continue with the gradual normalization of policy, Ian Shepherdson, chief economist for Pantheon Macroeconomics, wrote in a client note. Turkey's woes cannot inflict damage on the U.S. manufacturing sector on the scale triggered by the Asian meltdown in 1997 to 1998. Indeed, the Dow Jones Industrial Average dropped only 125 points, or 0.5%. Turkey's central bank announced new measures Monday aimed at halting the rapid depreciation of the country's currency. After the lira plummeted to a record low overnight, the central bank said in a statement that it would take all necessary measures to maintain financial stability and provide banks with the liquidity they required. The currency recovered somewhat after the central bank's statement and a pledge by Turkey's finance minister to lay out an action plan to stem the lira's losses. but there was little optimism that those measures would be enough to revive the currency, which has lost more than 40% against the dollar this year. As Turks braced for a rise in double-digit inflation and the lira's woes troubled global markets, Erdogan, who has blamed foreign powers for the crisis, insisted that the economy was solid, strong, and intact, according to the semi-official Anadolu agency. His government is locked in a bitter dispute with the United States over Turkey's prosecution of Brunson, a pastor from North Carolina. U.S. officials have called the terrorism charges groundless and demanded that Brunson, who remains under house arrest, be allowed to return to the United States. Brunson's fate is one of many issues dividing the NATO allies, which have clashed over Syria policy and the aftermath of the 2016 coup attempt against Erdogan. For the past 2 years, Turkey has been demanding that the U.S. extradite Fethullah Gulen, a Turkish cleric accused by Ankara of orchestrating the coup. Gulen has denied involvement. On Monday, as pro-government news channels warned of an economic coup against Turkey, Erdogan lashed out at the United States, telling an audience of foreign ambassadors that the bullies of the global system cannot roughly, shamelessly encroach on our gains that were paid for by blood, according to the Turkish Hurriyet daily news. Economists have warned that such statements by Erdogan could prolong the crisis, along with his refusal to raise interest rates, in line with his claim that low interest rates cause low inflation, a view at odds with mainstream economic analysis. But he has remained defiant while rallying Turks to counter what he describes as a foreign threat, urging citizens to sell dollars and gold to support the local currency and threatening to punish traitors for rumor-mongering. We will overturn the scenarios that target our nation, Erdogan said Monday. Turkey's Interior Ministry said Monday that it was taking legal action against more than 300 social media accounts that had posted messages that harmed the lira, local media reported. Turkey could be triggering the next financial crisis. Trump v. Erdogan, Merkel's Andalusian amigo, and John Thane loves Deutsche Bank. Our daily briefing for August 13th. We've seen this horror movie before. A developing country slides into an economic crisis. Its currency drops. Its companies, having borrowed in dollars, suddenly face bankruptcy. Their defaults threaten Western banks that had lent to those firms. That spooks the financial markets, and suddenly the crisis is global. The IMF steps in, backed by its largest shareholder, the United States, which is also the world's de facto lender of last resort. But this time there is a twist. The narrative above described, say, Thailand or Indonesia 2 decades ago, and various other crises. The drama now unfolding in Turkey is different, because the US is not the savior of last resort but the aggressor. It was the Donald's sudden escalation in the constant Turkish-American bickering that turned a merely declining Turkish economy into a plunging one, after he doubled American tariffs on Turkish steel and aluminum. The markets now see two men, Donald Trump and Recep Tayyip Erdogan, playing chicken. But in violation of the usual assumptions in game theory, both are less than rational, and possibly bonkers. Going into this showdown, the list of grievance was long. Since the attempted coup d'état against him in July 2016, Erdogan has been demanding that the U.S. extradite Fethullah Gulen, a preacher who resides in Pennsylvania and whom Erdogan blames for the putsch. He is also angry that the U.S. supports a Kurdish group which Erdogan labels terrorists. In return, Trump demands that Erdogan free Andrew Brunson, an American pastor in Turkey whom Erdogan has locked up on suspicion that Brunson is in the Gulen network. Now, writing in the New York Times, Erdogan accuses Trump of waging all-out economic war, and unsubtle warns that Turkey will look around for other allies. Russia and China, for a start. Great job, Donald. A quick recap: 1. Turkey is part of NATO, which you, POTUS, have already been dissing, to the delight of your pal Vladimir Putin. 2. Turkey and Russia are meddling in Syria, on the side opposing the one favored by you. 3. Turkey, via its refugee deal with the EU, is also the gatekeeper of the Balkan route for migrants to Europe. 4. European banks, especially in France, Italy, and Spain, have stacks of loans to Turkish companies on their books that will now turn bad. This could become not just a financial crisis, but a humanitarian and geopolitical one as well. Andalusia in southern Spain is a perfect place to talk about migration between Germany and North Africa. A large horde of German refugees, the Vandals, once stopped by, did their thing, and then moved on to northern Africa. They even left their name behind, dropping only the VL and Dallas. Sometime after that, it was the Africans' turn to cross the straits. They stayed for centuries. Now they are coming again, but under different circumstances. About 24,000 Africans have crossed to Europe on the Spanish route already this year, making it the largest vector of migration. They are arriving just a few kilometers from the venue where Angela Merkel was meeting her Spanish counterpart this weekend to find a common stance on this issue. Merkel, whose table manners were incontestably superior to those of her Vandal ancestors, and Pedro Sánchez, sworn in only 2 months ago, presented a picture of cordiality. As they were meeting, a new arrangement between Spain and Germany took effect, under which refugees who have already registered in Spain but move on to Germany will be sent back to Spain. That deal is cosmetic, because it will barely apply to any real-world cases. But it underlines the political will by Merkel and Sánchez to jointly counter what Merkel called the racist tendencies in European politics these days and to find a common European policy. Next stop, Salzburg, Austria, where the pair have to convince the other 26 leaders at the next EU summit. Deutsche Bank has long been the butt of jokes, as it stumbles from one legal problem to another while slowly sinking in the unprofitable mire of incompetence. But wait. Maybe we outsiders have missed something in this sorry tale. That, at least, is what the buy orders by 2 notable board members suggest. Especially the investment by John Thane, who in July bought slightly more than €1 million worth of Deutsche shares in his private account, made shareholders sit up. Thane is a longtime master of the universe on Wall Street and was the last boss of Merrill Lynch before it went to Bank of America. His purchase is the biggest by an insider that anybody in Germany remembers. And it follows 7 years when no board members at all bought shares in the bank, during which time the price fell by 60%. Thane must know something we don't. We'll keep paying attention. Rupee hits lifetime low of 69.62 amid financial crisis in Turkey. On Friday too, the rupee had lost 15 paise to end at 68.83 against the resurgent dollar. A weak trend in Asia coupled with sell-offs on Wall Street last week and a slump in the Turkish lira dampened the sentiment globally, brokers said. The rupee tumbled 79 paise against the US dollar to its lifetime low of 69.62 in early trade as Turkey's financial turmoil fueled fears contagion might spread to other emerging markets. The currency's previous record low stood at 69.13 on July 20, 2018. Increased demand for the U.S. currency from importers and banks amid fresh foreign fund outflows mainly hit the rupee sentiment, forex traders said. On Friday too, the rupee had lost 15 paise to end at 68.83 against the resurgent dollar. Emerging market currencies have declined sharply as Turkish lira has fallen to all-time low level after U.S. President Donald Trump imposed sanctions and tariffs on Turkey. The crisis is unlikely to resolve anytime soon. An absence of aggressive intervention by the RBI has also hurt the rupee. Market is nervous ahead of India's CPI data due later today. The dollar has strengthened to multi-month high on expectations of aggressive interest rate hikes by the Federal Reserve in coming months as the U.S. economy is experiencing strong growth momentum. Hence, due to all these factors, the rupee has declined to all-time low level today, Rishabh Maru, research analyst at Anand Rathi said. Investors are uneasy over whether Turkey's government can cope with a plunging currency, a diplomatic spat with Washington and other problems. President Recep Tayyip Erdogan has accumulated more and more control over Turkey's financial system and central bank. U.S. President Donald Trump said Friday he will authorize higher tariffs on Turkish steel and aluminium. That came after Turkey put an American pastor on trial on spying charges. Erdogan promised Sunday his government will take unspecified necessary actions to calm markets. Investors preferred safe havens such as the US dollar and the yen after a plunge in the Turkish lira sent all emerging market currencies sharply lower. The lira has fallen about 45% against the greenback this year on worries over Turkish President Tayyip Erdogan's increasing control of the economy and a deepening diplomatic rift with the United States. A weak trend in Asia coupled with sell-offs on Wall Street last week and a slump in the Turkish lira dampened the sentiment globally, brokers said. Meanwhile, the Sensex fell over 288 points and the Nifty dipped below the 11,400 level in opening trade today on heavy losses in PSUs, auto, metal, and banking counters amid a global rout in equity markets. Asian stock prices were trading lower on fears that financial crisis in Turkey could spread to other economies. The Shanghai Composite Index lost 1.7% to 2,746.90 and Tokyo's Nikkei 225 retreated 1.9% to 21,885.45. Hong Kong's Hang Seng shed 1.8% to 27,850.55 and Seoul's Kospi retreated 1.6% to 2,249.65. Sydney's S&P ASX 200 declined 0.5% to 6,246.80. Benchmarks in New Zealand, Singapore, Bangkok, and Kuala Lumpur also fell.